Hey everyone, hope you're having a good day. My name's Andy. My channel is Finding Value. Today we're going to go through Twitter, see what people are sharing on social media. It's generally related to three different topics: wealth building, commodities, and or financial topics. I sprinkle in my financial opinion as we go. So we're going to dive right in. We're going to take a look and see what people are sharing and the data that they've got. If you want to follow me, it's at Finance. And if you want to join our community, finding-value.com, I dive deeper into all of these topics, looking for potential investment opportunities, and I'm sharing my journey as I go through this commodity bull market and a potential slowdown here in the short term, but commodity bull market that we are in, and I think we're going to get a big move after this slowdown kind of gets behind us. So Mayday coupon code is still active. HFI Research says our 4-week average U.S. oil production, including our modified adjustment. So 13.5 million barrels is what we've got in the United States. We hit that in 2020, big move lower. And then we worked our way back up to that 13.5 million barrels. Is this rolling over? One thing that you can look at is if you were to draw a trend line through here and another trend line at the tops, you can see that we've broken that trend and we've been kind of flailing on the right-hand side here to make new all-time highs. Is this rolling over? Now, some people will say production's rolling over. I would have to say, hold on a minute. The oil price isn't exactly really high right now. We're at a pretty low price. When you look at gold to oil ratio, it's above 30, which is normally a pretty low level. So inflation adjusted, oil prices are actually really low. So I'd like to see $100 oil and see if we can increase production first before saying this is for surely rolling over. Because it might be a price sensitive issue versus a just flat out production going as fast as we can. Commodities are still cheap. This is commodities continue to look undervalued relative to the broader market. Look where we're at, guys. What the heck? And that was October 22. That's most recent data here, but this is way down here, guys. Super good value for commodities. We are lower than the 1970s bull market, the beginning 70s where we started, and then also in 1998, 99. And we went to these levels up here at very overvalued levels. 1980 was another good spot for a selling pressure move right here, 81, 82. The big three demand, this is 4-week average U.S. implied oil demand for gasoline, distillate, and jet fuel. So we're real high. We're not quite beating 2021, but we're at a pretty good level. And it is equivalent to 23 and 22 and some of these other ones of previous years. Here is, I don't know how to pronounce his name. Always different, but sometimes similar. And he's got this fractal of what we've got trading on now. Very similar to 2022 and that bigger pullback that we experienced in 2022. Is this the beginning of a larger pullback in the S&P 500? We'll have to wait and find out. Lots of people are trying to call tops, and sometimes tops take longer than what most people realize. This isn't a swipe left or swipe right. Topping patterns for some major indices might take 6 months or 2 years. And it takes that and it kind of slows that big momentum that's been generated since 1982. 82 is when we had the lowering of interest rates from a high interest rate to a very low interest rate that basically reversed in 2021. Now, with higher interest rates, I do expect that momentum that was generated in financial assets to eventually slow down and roll over. And that's why I'm looking for basically fractals and patterns and things where we could potentially roll over in NASDAQ and S&P 500. Peter says, at what gold price would you consider it to be overvalued? And the first thing that people do is they try to think of a gold price priced in dollars. I would price it against financial assets and I would price it against the M2 money supply. So when I think it's overvalued, gold would be at a price that historically would be overvalued against the M2 money supply and against financial assets like the S&P 500, Dow Jones Industrial Average, or technology stocks. So what would be an overvalued price for gold? I would say, bar none, overvalued, Dow Jones to gold ratio of 0.5. That is for surely overvalued. So anything under 1, I would say you're undervalued. Or overvalued for gold, I mean. You're overvalued for gold, and then you would be undervalued for Dow Jones. Another one that you can look at is the M2 money supply getting back to 1980 level. That would definitely be an overvalued state for gold. What that means is that the market conditions that the herd was subjected to would be similar to like that of the 70s that drove gold to very high levels and eventually could go back onto a complete gold standard given where the price of gold is in relationship to the M2 money supply. If we were to do that again, we would be, 4 or 5 digit, no, it'd be 5 or 6 digit gold price probably. So it'd probably be a 5 digit gold price is my guess. It could be 20, 30, 40, $50,000 an ounce for us to do that again, would be my guess. And remember, the M2 money supply continues to go up. So it's a moving target that continues to move away from the price of gold for it to be overvalued. Capital Cosm says, this is a lot of work just to get Powell to cut rates. And it says, just in, who declares the MPOX a global public health emergency? I'm just going to say this, guys. And I don't know if you've noticed this. Pull up a chart of the 2 and 10-year yield. Then look to see how the big money position. So yields were falling during 9/11/2001. We were in a slowdown, and 9/11 occurred during that slowdown. The great financial crisis was obviously people were positioning. They knew it was coming because the banks know that these loans are going bad. They're seeing it come in, a flood of bad loans. So they're obviously going to front run that one. COVID, we also had COVID, which had the 2-year yield dropping like a rock for about 6 months to a year. So my question to everyone that's listening to this is, what is the possibility that these events have all occurred when the yield curve is uninverted? How is that possible? How do we not experience these types of crashes or events during a market move upward? Why do they always occur in the middle of basically when the big money's already positioned in bonds? Why does it always act? How is that possible? I know, it's weird, right? Here's oil demand. This is U.S. oil demand here for 2024. It's almost off the charts for the 5-year range. We're doing almost out of that 5-year range there. Very strong demand. Here's Urin Timmer from Fidelity. He says, the unwinding of the carry trade was a major component of the market drawdown, which by definition meant that the dollar would decline at least against the yen. The fact that the dollar is declining at all is to him a sign that there isn't a lot of stress in terms of liquidity. Typically, the dollar would rally at times of elevated volatility, but that's not the case last week. That suggests to me that this was merely an unwinding of carry trades and not the start of a liquidity or funding crisis. So he's using the value of the dollar either going up or down as the case for a liquidity problem. And we broke to the downside here with the dollar, which means to him that it's not liquidity crisis driven. If it was liquidity, the dollar's value would go up, not down. Makes sense. Makes sense. And I wanted to share that. JSG, latest comparative inventory analysis for 8/14. The total commercial petroleum stocks, X other oils, is down 1.5 million barrels. The fair value of WTI, given where we're at in inventory levels, is $77 a barrel. It's roughly in line with the current price. If you want higher prices, we need more drawdowns, in his opinion. Eric Nettles says the widest gap in valuations between small and mid cap energy stocks and large caps in many years. The result? Many companies are trading at 18% plus free cash flow yields despite strong balance sheets and decades worth of stay flat inventory. The apathy curative, either M&A like we saw this week or meaningful share buybacks which are happening in real time. So we do have the small mid cap guys underperforming large cap, and that's where your value's at. It's that valuation gap that we're seeing between that. Breaking China, Chinese bank loans contract for the first time in nearly 2 decades. That is what deflation looks like. That's a problem. And it's driven by a couple of things. It can be driven by demographics and bad loans, or both of them put together. If you've got a cliff of demographic that drops off a cliff at their home buying years, and you've got a little bit of a bubble in the mix where home prices could go down, that could be a problem. So that's where you can get loans to go belly up and they can foreclose or go underwater. And that's a problem if you can't offload those homes on any sort of potential buyer, then prices can continue to deteriorate downward, causing more people to go into foreclosure or go underwater if they don't want to pay the loan anymore. And I think China is going through that right now. This is not good for China, obviously, and it could drag down a lot of the world too in terms of demand for commodities and stuff like that. But they're going to have to get through this, and then I think the explosion to the upside for commodities will come probably after this turns around. Correlation economics, gold only has one way to go. As the debt percent goes up, gold goes up. Yep, kind of true. Peter Lynch says, often there is no correlation between the success of a company's operations and the success of its stock price over just a few months or even a few years. But in the long run, there's a 100% correlation. This disparity is the key to making money. It pays to be patient. And I had to learn that early in my years. You have to be patient. You have to wait for things to play out. And then you have to find the value disparity where the stock price is underneath the value of the business. And then you have to wait for that valuation to change or for the market condition to change and swing back into favor of that company, of whatever the company does. Mike Zaccardi says, we forecast significant policy rate declines in most economies in the next 12 months. That is a slowdown. Slowdowns are what cause these economies to lower interest rates. So these are the projections. We've got Japan with the only increase, Switzerland holding flat, and most everyone else declining in interest rates. And this will cause currencies to fluctuate against each other depending on when they cut the rates against each other. The timing of rate cuts. Why is iron ore so weak and commodities stumbling? China and PBOC explain a lot. The liquidity is starting to turn, but it's been depressed. So we've had depressed liquidity in China, which is open market operations is the orange line, and then iron ore is the black line there. It's depressed because of we've had depressed liquidity down here for a little while here, and this is 2024 here. So we need that liquidity to work through the system, and it'll draw or pull up iron ore with it. Grady says, the big picture charts I post here shows the life-changing opportunity for the rest of the glorious commodities bull market. He called the start of the commodities bull market 4.5 years ago. Palladium here through is marching to its own drum, which platinum group metals often do. Below is one of those life-changing charts, and this one shows palladium bottoming out right here before it starts its bull run. So we've got support going across. We have a 40-year parabolic base indicating a huge move is coming. We've got another 2,111% move up this time starting at 1170. It means that the target is 24,700 for the third wave, in his opinion. What do you guys think of this? Do you think his call is off? Do you think we could get a drag lower if there is a slowdown in the market? But we've got this repeating pattern from 1982, 2011, 2011, and maybe another big third wave move. In Palladium. Rock bottom entries. The stage is set for a massive move in silver. We've got a momentum ceiling floor that we got to break through first. We're at the, looks like we've got the 150-day moving average and a 200-day moving, or 20-day and 150. So this is the 150 down here and then the 20-day. And this looks good. It looks good to work its way on up. Everyone knows I'm a huge silver bull, platinum bull, huge precious metals bull in general. I think it's all coming, guys. Looks really good. Peter Schiff, the July CPI confirms that inflation is not headed back down to 2%. Prices rose another 0.2% in July. Year over year, the CPI is up 2.9% and core is up 3.2%. Yet despite this, the Fed will cut interest rates in September. Rate cuts will provide the fuel that heats up already hot inflation. I don't know. Everyone is telling me that these rate cuts are going to happen. I'm kind of interested to see if this data persuades them not to cut interest rates or whatnot there. So that's what we're seeing there for Peter Schiff. That's his opinion. Coming on down. I think I just blew right past it. There's Peter Schiff. Investment wisdom, couple of quotes. The elementary mathematics of compound interest is one of the most important models there is on Earth. Hold on, putting upward pressure. Sorry, guys, got to go back up. Wrong Peter Schiff quote. Okay, there it is, Peter Schiff. Going back to Grady, he says, that is a very good-looking chart for precious metals miners. I actually love this chart. It's SILJ versus GDX. And these charts, not this chart, but when I do these ratio charts, this is exactly what I look for. I look for a breakout and then a retest. And that's exactly the great entry point right where we're at. So SILJ versus GDX, 3-year bullish falling wedge. This is signaling that SILJ is going to outperform GDX. And you bet your pants that I really like the silver miners here. I really, really do. And if you want to know the exact silver miners, you can sign up to the website. There's my plug. Investment wisdom, an ability to detach yourself from the crowd. I don't know to what extent that's innate or to what extent that's learned, but that's a quality you need in order to basically be successful in investing. You have to break yourself away from the crowd and think your own thoughts. And you're going to have to go counter to what most other people think. Eric Nettles says, record low financial demand for oil versus record high physical demand for oil. There's your disconnect. Your opportunity is what that is. And there it is. It's the biggest disconnect going back. 2020 had that disconnect too. We also have a really cheap oil to gold ratio. We really do. Money wisdom. You might think you want an expensive car, a fancy watch, and a huge house. But I'm telling you, you don't. What you want is respect and admiration from other people. And you think having expensive stuff will bring it, says Morgan Housel. I don't even know if I really care about that. I mean, I want respect from the people that I care about, but I don't really need that from other people necessarily. And I know I probably look pretty broke. I'll be honest, guys. I look broke. I wear cheap clothes. I drive old cars. And I've got filled up brokerage accounts. And that's what I do. I just save my money because I don't see the value in buying this expensive car or fancy watch. It'd be nice to have a little bit more garage room. My house is completely fine in terms of the size of it. I just like another garage space or two. That would be sweet. Like a 5-car garage or something like that would be really nice. And that's kind of that's where I get excited. 5-car garages. And then the cars that I put in it, I don't care about an expensive car. I want a car that handles incredibly well and is really fun to drive. I don't care about what other people think. I care about the feedback from the car and what I want out of it. Here's Grady. This is a silver chart going way back. So it says, still doubting that silver can reach almost unimaginable levels? Then ponder that silver's all-time high is not $50. It is $806 in 1998 USD value. And in 2023, the USD value that is $1,506 using Fed's massaged inflation calculator. Using the true inflation, the number is probably 2 to 3 times that 1,506. Silver had been in decline for 500 plus years when it bottomed just before the turn of the last millennium. Could $800 or higher happen briefly again? When silver goes ballistic at the end of the commodity bull market, it absolutely can. Note that the false breakout, the FBO, on or in the chart below is the bear market during the 80s and 90s. So this is the false breakout down here that we've got. This is silver trading upward in the 1300s, 1400s. At 1477, we hit a peak, and then we were going lower and lower throughout this time frame. I'm sure it deals with finding silver, the increase, I'll say the efficiency of getting silver out of the ground too, has all been contributors of this. And what he's saying is this is a false breakdown of this big falling pattern or channel or wedge formation. And now we're starting to work our way on up. So he thinks that we could go way up in terms of pricing for silver. The mother of all false breakouts. I love it. We did get an inventory draw. Crude down 5.2. Well, I don't know if that's the official numbers, but this is API numbers. I know it was not as bad as this, but I know that there was a draw that occurred if you were to add up gasoline and crude and all the rest. Global oil demand continuing to go higher, and these are the projections and the predictions of what OPEC and IEA. IEA thinks we hit 105 and stay steady into 2025. OPEC thinks that we continue to go up and we're going above 107 million barrels per day. God, 107 is a lot. That is a lot of production. I wonder if supply can keep up with that. That is what's interesting. So we go from 105 at the beginning of 2025 to 107. Julian, I've already talked about this one last time. So we're going to end it there. That's what I've got for today, guys. Give me a thumb up for the content. Subscribe to the channel. Subscribe to the website. Mayday is their coupon code if you're interested in getting a discount. We have a 7 o'clock a.m. Saturday question and answer session, Mountain Time. If you want to ask me questions directly or ask people in the community questions. So that's what we've got coming up this weekend. And that's all I've got. So we'll catch you next time. This is Finding Value.